Coming up on this episode.
Personal finance is very, very personal. Investment is very, very personal. So the number one thing that you need to ask yourself, what is my goal? Like, why would I be investing? Just because everyone has said money market fund is good for everybody, then everyone just goes ahead and opens a money market fund. But when you look at that individual and ask them, why are you opening this money market fund? They wouldn't have a reason, right?
Sponsored by the Fund Managers Association.
Hello, everyone. Welcome to the ICIFA Investment Show, the Gen Z edition, where we are having young people on board. And actually, what we are doing here is we are going to discuss about investments, saving plans, and also we want to understand about loans. Here with us, we have a team made up of Gen Zs and also a financial analyst who is going to address almost all the questions they have. We hope that you'll be tuned to our show, and this is just the first one of the Gen Z edition. From my right, let me welcome the guest that we have to you, colleague.
Thank you, Martin. Hi, everybody. My name is Juliet Sospita, or FA Julie. I am a certified investment financial analyst, and I'm so glad and excited to have these conversations with us young people. And stay tuned for more.
Hi everyone, my name is Keith Washira. I am a proud Gen Z and I am eager to learn about investment, so I'm excited to be here.
Hi everybody, my name is Nguvi Moasia. I'm also a Gen Z, not a Gen Z at heart, but a real Gen Z, true Gen Z. And I'm here, I just want to understand about money. I want to demystify everything I have had. Today, I am here with you. I'll make sure I get everything I want.
Yeah, thanks so much. We are happy to have you all in. My name is Efe Martin Pule, a secretariat of the Institute of Certified Investment and Financial Analysts. And to our Gen Zs who have come today, I wanted the first question between a loan officer and investment professional. Who was the first person that you actually encountered?
A loan officer.
A loan officer.
Yeah.
And to
I have encountered neither, but I have heard of investment professionals first.
Oh,
Yeah.
great. And the person who actually encountered a loan officer, I know loans about credit. The first question is, would you actually invest, maybe use your investments to take collateral, depending on the experience you had with the loan officer?
No, I wouldn't.
Why?
Reason being, I think the first loan officer I had about was auctioneers and things in that line. You know, like the way you hear somebody had like a house packed with things and then they took a loan, used that as collateral, and then one day they were not able to pay and everything went. So I think from the experience I have had, not really a personal experience, but just from other people I know, I feel like I would shy away from that. No, let's not do that. Not today.
Okay. Is it Keith or Keith?
It's Keith.
Okay.
Yeah.
Okay, Keith.
Yeah, Keith.
To you, you have said you have heard about investment professional.
Yes.
The question is, will you actually take a loan to invest? Yes.
That's a good question. For me, I would say no, because as a young person, you're just starting life. Generally speaking, you don't have that much money. You're still trying to figure things out here and there. So taking a loan would just make you go back further. And you can't predict the way things normally go. So if your investment was to go bad, you're then having to pay back that loan. So no, I would not advise that.
Okay. Thanks so much. I think that was a good icebreaker.
Yeah.
So there are some questions that we understand as the Gen Zs you had. We'll start from our sister there. Nguvi, please.
I think building up from what we've just discussed on the loans and investment officers, do you guys feel like there's a lot of information out there and it's really difficult to filter through which one is true, which one is not? Because if someone watches this, this was just our own opinion. I encountered this, he encountered this first. But if somebody watches it, how do you filter through? This is now the real information, and this is just opinions, for lack of a better word. So how do you filter through that? In an era where we have a lot of information out there, we have Instagram, we have TikTok. Right now, almost everybody is a financial analyst and a finance coach and all that. How do we filter through that?
Nguvi, that's a very, very good question. And just to build up on what you've said, right now, I think one thing that you're experiencing is that of information overload. Like there's just information everywhere. And when it gets to you sieving what really matters to you, it can be a bit hard. Now, let's compare that with the earlier or older generations where information was scarce, right? And right now, we can say technology is really acting to our benefit in the sense that when you open your phone, there's all this information. So we have that to advantage. Now, in the earlier generation, again, when you talk to your granddad, your grandmom, the only investment that they learned about was land, right? And it's because you were in a community setup, you know, the next person that you saw was your neighbor. And the question is, how do I expand my parcel of land? How will I ensure that my children will also have something of, you know, in terms of land? So these days, it's different. There's a whole talk about money market funds. I'm pretty sure, Keith, you do have a money market fund investment somewhere, right?
I do.
Pretty much like everybody has that. Yeah. And why? It's because everyone has been talking about money market funds, money market funds. So the question is, even as you're looking at investments, how are you able to sieve through all that? So how I look at it is, number one, when it comes to investing or personal finance is very, very personal. Investment is very, very personal. So the number one thing that you need to ask yourself, what is my goal? Like, why would I be investing? Because, and I can also give you an example. This is what we call the herd mentality, the HERD mentality when it comes to investments, whereby just because everyone has said money market fund is good for everybody, then everyone just goes ahead and opens a money market fund. But when you look at that individual and ask them, why are you opening this money market fund? They wouldn't have a reason, right? So that should be your starting point. Why am I saving? Why am I investing? So that would look like, for Keith, you've just finished high school, right? Yeah. So it would look like, I want to start saving the little pocket money that I'm getting. Maybe after I finish university, I can be able to buy myself the latest gadget then. Or now that you've learned about investments like global stocks and all these other investment opportunities, you'd be like, you know what? This little investment that I'm getting, I want to start now learning by practicing, you know, the little that I'm getting. Yeah. So it can, again, it all boils down to the goal that you have as an individual. That is one. Number two, it is the source of information, right? So being able to identify, okay, fine, there are a lot of influencers and content creators out there who are talking about all these investment opportunities, but how am I able to verify this information? So that is very critical. We have credible and reliable sources of information. Number one is the Capital Markets Authority. So with there, you can be able to see which money market funds are actually regulated and licensed by the Capital Markets Authority. And why is this important? Because if anything happens, then you won't have anyone to cry to if the money market fund that you've invested in is not regulated. So that is very important. So you need to know all these sources of information, such that when you come to social media and when you're scrolling and when you see someone talking about, you know, an investment that is giving you 20%, you're like, wait, let me first of all go to the source of information and verify if this entity is actually regulated.
Thank you so much. That is information from our financial analyst. To Keith, there's also some questions that you had.
Yes.
So
for me, I wanted to know, speaking about the way you talked about investments and money market fund being one of them and how they're supposed to be regulated for you to know which one to invest in. Would you say there's a certain amount of capital that you require to invest, or any amount of money would do?
So, I mean, the beauty about what we have in the markets today is that there is no barrier when it comes to the amount that you'd want to invest in. I do know of money market funds where you can invest as little as 100 bob, right? That's good. But also, there are other sophisticated investment products where there is like a minimum amount where you can invest like 250,000. And that one is mostly for what we call the sophisticated investors, people who understand their risk tolerance and they're okay with taking an additional risk. So there is that. However, as much as we're talking about, investing has got different facets, right?
Yeah.
So we can talk it from the aspect of money, skills, and other things, right? So for you, Keith, you'd ask me, I just finished high school, so I want to start investing. Where do I start? I wouldn't throw a money market fund to you, because for me, the best investment that you can ever have is in yourself. Right?
Yeah.
So first of all, building your skills and creating value so that in future you can be able to be compensated for the value that you would have created. So right now, even before you join, the college or the university that you want to join in, it's about you asking yourself, what skills do I want to get out of this university that will enable me, or rather position me, even when I go to the job market, be compensated for that value that I'll be creating. So that is your first time. And then now after that, even as you're upskilling and learning all these other things, it's now about learning also like the financial aspect of it. And I know we talk about financial literacy, but I think one place that we need to improve, like as a country, is integrating the financial literacy aspect even in our syllabus at school, right? Like there's a need for people to learn how to invest at an early age. So for you, even as you're, skilling up and doing all these things, it's also important for you to understand all these investment opportunities. Yeah.
Thanks so much. I think you've brought in a very, very important aspect, financial literacy in schools. What are some of the factors that you feel that we are not having the financial literacy in schools? Because I believe we have Bible studies in school.
Bible studies?
Yes.
Financial literacy Bible studies?
We have, the question is, if we have Bible studies in schools,
oh, okay,
why don't we have the financial literacy?
Yes, that's a very good question. Yeah. I mean, again, it all boils down to our policies, educational policies that we have as a country, and there is room to integrate financial literacy classes or lessons to that aspect. Because, again, you keep on asking yourself, why do we have a lot of scams in the market these days? And people, how many, I think those are reports, or rather, was it beginning of this year, people lost around 3 billion Kenyan shillings in scams, right? Yeah. So I think it all starts in our schools. How do we teach our young people to understand money, right? Because also there's the whole, as human beings, we are inherently you'd want more. I don't want to use the word greedy, but you'd want more. So when somebody comes to, you, Nguvi, and tells you, I can give you a 20% return per month and, will you take it? So if you're not financially literate, you'd be like, actually, that's a good deal, Yeah. And you end up, putting your money in and you lose it. And this is money that should be going into the economy, right? Investing in places that will ideally just trickle down to the development of our country, whether that is through businesses, legitimate businesses, or even investment opportunities. So I feel that is where financial literacy can really play a huge role. Yeah.
Thanks so much. This is our FA, Julie. To Nguvi, there was another question you had.
I think we've mentioned shares, we've mentioned stocks here and there, but my question would be, what do you have to tell us, young people? We are commonly referred to as the microwave generation, as we want to ekelea, after we ekelea, very fast, quick returns. But now, with my understanding, the kidogo understanding I have on investments, there's some of it that will need a bit of time, a bit of patience. What do you have to tell us around that? The quick returns,
yeah.
And I think that's how, again, we end up being scammed.
True.
Because like you've mentioned, we want a 20% return, but when you look at what is being offered in the market, it's an 11%. That's the range. Mm-hmm. So if in the market it's an 11%, and then you tell me 20%, what am I looking at? That instant, I want to make more money faster. And what do you have to tell us around that?
Yeah.
Around investments and even the patience of just waiting on, calm down, this will take time. What do you do? What do you do?
Okay, that's a valid question. And let's first of all try to look at the root cause of all this. And it all boils down to what we see on a day-to-day basis, right? Social media. We tend to see people with big cars, they're very young. We tend to see people big mansions, and we want to be like them, or they want to emulate them. So any opportunity that you'd get for you to live that lifestyle, you'd take it. However, we know that true wealth takes time. That sustainable wealth, it takes time, and I mean, there are a lot of examples that I could give right now, but you'd see people who've gotten wealth over a short period of time. It doesn't last. You know, these are people who will go bankrupt, and you're like, what really happened? I love giving this person as an example, who's Warren Buffett, right? His wealth has been created over time through hard work and constant investing. So I also think as young people, again, it's all about you acknowledging the fact that true wealth, first of all, is all about, it requires patience, it requires consistency. That being said, also as a young person, time is your asset. Like the sooner you get into investing legitimately, then the more your wealth will grow. So that's why we're saying, like, right now, if you're 18, 19? 19?
Yeah.
For you are more advantageous, or rather you stand at a better place of building your wealth than someone who's starting at 40 or even 50. So just acknowledging that fact that, I am still young and I have like a whole time ahead of me, and money is there to be created, then that should give you a head start that you still have time. Be patient, be consistent, be disciplined. You'll get there at the end of the day. Yeah.
Thanks so much. And also just to add on about this microwave generation, I think it's also because of social media, as he has said, and when we buy goods, instant delivery, I think our parents are more patient, because you see, MoneyGram took time, telegraphs took time, but for us is when you want to go to watch a show, you don't have to wait until next week. Just go to Netflix, put in the show, you can watch the whole season that same night. So Kate, back to you.
Okay, so for me, Julie, you spoke about investing in yourself as a young person. Would, let's say, me buying nice clothes for myself or jewelry for myself be considered an investment? Because according to my understanding, those are liabilities. They're not gonna increase my value in any way. So how do you go about like saying, okay, wait first, you don't need the clothes, you don't need the jewelry, find a way to make this money work for you? How do you go about that?
I love that. And that brings us to another topic on gratification, right? So there's the instant gratification and there's the delayed gratification. So mostly we advise people to at least practice delayed gratification. Right now you'd want to look good and wear, like all the jewelries, but the question you ask yourself, at what cost? And what does that have any future benefit for me as a person, right? So how I'd look at it is, or rather how I look at investments, even in myself. And one thing that this one I want to emphasize, the best investment that you can always make is in yourself. And when I talk about in yourself, I talk about knowledge, right? You learning things that will be able to ensure that you create value so that you can be compensated for it. Let me give you an example. So right now everyone is talking about AI. These days we don't Google. What do we do? I love that. I love that. We ChatGPT, right? So the question will be, how do I, as a young person, first of all, how did this even ChatGPT come to be? Who created this ChatGPT, right? What skills do I need to learn right now to position myself in such a way that, one, because right now, actually, a lot of companies are laying off, right? We have Amazon, I think it has laid off, I don't know how many people. Yeah, Microsoft laid thousands of people this year alone. So again, these are the trends that you as a young person, you should be tracking right now. So asking yourself, why are these people being laid off? And even as I'm thinking through the kind of career or other course that I want to take in the university, will it be redundant in the next few years? And how do I position myself to ensure that I will not be redundant because of AI? So meaning investing in yourself will look like taking short courses, even as much as you're doing your degree, right?
Yeah.
in Coursera, learn about generative AIs, learn about the next trends. I don't know, people are talking about robotaxis and quantum computing, whatever that is. So always being appraised of what is happening around you and ensuring each day asking yourself, how am I positioning myself to ensure that these robots and AI do not overtake me as a young person and I'm actually ahead of all these trends. Yeah.
It's a very good answer.
Yeah. Okay.
Interesting. So I believe
Yeah.
the jewelry and but if you have some kind of net still, that it's not bad. Huh?
Yeah.
Okay, to movie, do you have any further questions?
You've mentioned AI. What does the future of finance look like? With the AI in the picture. What are we looking at in the future? For anybody who is out there who even wants to become a financial analyst, who wants to just understand money in general,
Yeah.
how is that looking like?
Are you talking from a professional standpoint or from someone who's from outside, any professional who just wants to invest from?
I think for me as a Gen Z, because we've all agreed that we ChatGPT everything.
Yes.
So do I go on ChatGPT and ask ChatGPT, hi, I would like to invest. What would you advise? You know, like with AI and all these other tools, what is the future looking like?
That's-
for someone who
yeah.
wants to invest, even for young people in general.
We do have what we call robo-advisors. I don't know if you've interacted with them. So, and that is pretty much just like having financial advisors, not in human form, but in AI. So essentially, when you go to a financial advisor, you'd ask them, where can I invest in? And then they'd ask you questions like, what's your risk tolerance? What's your investment horizon? What are your goals? Da, 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 da. So these days, with robo-advisors, you have you chatting with them and they can be able to actually recommend investment products based on your answers that you've given. So we're already there in terms of AI when you look at it from a finance perspective. And yeah, so I don't know if that answers your question, but yes.
Yeah, if
So
I can.
so how do we filter through this is actually right information? Because of course this is a robot and it's of course giving you feedback based off on what you fed it. That is what AI is. It's just a tool. You feed it information, it gives you an output. So now how do you properly now, like, I don't know whether mitigate in some way that this is true, I can go with this, I cannot go with this. Because we've seen a lot of cases of ChatGPT causing people to commit suicide or things like that.
yeah.
And now it's, where do we stop? Like, where do
Yeah,
we stop?
yeah.
You need to stop now. Go look for Julie. You need to stop. Like, you know, you need to stop. Go look for Julie.
No, that's,
If I can add something
Sure.
on what you have asked. Nowadays, the way you have said, she has said, there is the issue of actually adding on the skills you have, investment in your skills. So they have prompt training. They actually prompt. How do you actually prompt a ChatGPT to give you that information that you require, or that robo-advisor, like how do you actually give the information so that it gives you the right kind of answers.
Yeah.
So you see, this is garbage in, garbage out.
Yeah.
So it's important when you provide the prompts, provide actually accurate. From your end, it should be very accurate. Yes. Then it's important to always have this kind of information, especially on financial literacy, so that you just don't implement everything you hear. As much as F.A. Martin will tell you land is good, but is it good for you? No, that's another question. Yes. So it's also good, are you discerning the information that you are getting?
Yeah.
Yes.
Yeah. And also just to add on that, sorry to cut you short, it's about, goes back to my first point where I talked about having your goals and really learning like what your goals are. Like that will even sort out the issue of instant gratification. Because sometimes when I have like a very, okay, let me give you an example. I want to have like 100 million Kenyan shillings net worth in the next 10 years. That will be my goal, right? It means right now, if someone presents me with, I don't know, a chain where I have to chuck around 300K to buy it, I'm like, there's no way I can, like, I don't want to do this. I would rather invest in it, grow so that it gets me to the 100 million net worth that I'm actually aiming at. Yeah. So the same thing, it goes to, whether you talk to an advisor, whether you talk to a robo advisor, the first step will be you being self-aware, knowing your goals. So that also when someone tells you, you can actually invest in land and you want to grow your money like aggressively in the next 5 years, it'd be like, land doesn't give me any cash flows. When you look at the appreciation rate of a land, it's usually like around 2 to 5% depending on the location. So you'd ask yourself, why are you recommending land where I should be investing in Tesla because they're now launching their robo-taxis in Houston and San Francisco, So that's how you also think around it, and it will also kind of guide you in terms of the conversations or even the recommendations that you get from other people, and knowing, do I take this, do I not, and knowing what's good and what's not for you.
Okay.
Yeah. Just for an icebreaker,
Yeah.
Kate, I feel you are the youngest. Just a question for you.
Yeah.
If you were to choose maybe to put your money in a circle, or the same amount in a circle, same amount in a money market fund, which one are you likely to choose?
Going off of what I know, money market fund is not really an investment per se, because the returns per annum are not that high. So it's like, if you ask me, would I rather put my money in the bank or money market fund? I would say money market fund. So money market fund is just a place where I would park my money and then look to invest in other things. So I would choose money market fund, but I don't consider it an investment.
Okay. Julie, would you agree that money market fund is not that an investment?
Again, yeah, it depends with the definition of how you define investments, but I know most people, or rather the conversation on the ground is, a money market fund is just a place to accumulate your money as you think through like other investment opportunities out there. However, how do we define investments? Okay, let me, throw the ball to you.
Okay, thank you for the question. How would I define an investment? And interesting, I didn't expect that one. And I would define an investment as an avenue whereby you can increase the returns from what you have put in, and in a structured and conservative way, so that we move it away from, you're saying, betting or gambling. So investment, the difference is for investment, it is in a controlled environment, and the probability of losing your principal amount are quite low.
Given,
If it comes to a point where the probability of losing your principal amount have become shaky, almost 90%, now it's not an investment. It becomes more of gambling.
Okay.
So that's how I define an
would you,
investment.
based on your definition, how would you categorize stocks, because they're high risk, very volatile?
For stocks, I would say that they are kind of, if we were to categorize stocks, they are like an aggressive asset class because of the volatility they have. The volatility is just the up and down movements. You see, it can gain by 10%, lose by 20%. But over time, investment in stocks, you'll find that there is a consistent way it's coming. This is other than a pyramid scheme or a bet. You see, when a bet you lose, there's nothing you can claim. But for a stock, when you invest, even before the company goes bust, there's usually a way you can try to actually sell the stock. So definitely, that's how I'll advise.
Okay.
A good example I'll give, when Safaricom came in for the first time, the IPO, remember? Share price was around, I think, 5 shillings. Then it went down, then it went up. Again, when it was going to Ethiopia, Safaricom was around 42 per share. But again, it came down to around 9 there. I think currently about 16. So you see those movements. Yes, they are there, volatile, but you're not going to actually lose everything you invest in.
Okay, just to push back to you, we've seen Standard Group and Nation Media, still the same thing, people invested, but right now the shares are technically, so what will you say about that? Still in the same, line.
Yeah, so on that one, we should say that this is an unfortunate case sometimes. You see, Standard Media was more of an advertisement. So because of, I can say about digitization, we have seen that people are moving from hard press. Instead of actually going to nation media to advertise our product during news. There are so many other internet content providers who could provide you with that platform, and even they have viewership. So basically, I'm saying it's going down, but there is a big but on that. If they're able to invest in digitization the way they are doing, and they actually have a new managing director that is Nation Media, I believe that there is going to be a turnaround. So it's going to survive.
Okay. Anyway, what I was driving at is when it comes to stocks, yes, they are an investment. However, how you look at it is from a growth perspective, and you also be cognizant of the fact that they are high risk, right? So as much as we're talking about, let me just give an example of globally speaking, Tesla, right? Tesla is trading at around $480 per share. 1 year ago, it was at $280. And so when you look at it from that perspective, if you had invested like 5 years ago and it was maybe 300 and then it goes to 280, looking at that from that perspective, then and then you sell it at that point, then it means you would have lost part of your capital. So however, when it comes to investing in stock, it's about looking at companies with good fundamentals at discount prices, right? So when you're able to point out these companies that are coming up with products that will pretty much change the way we think in future, then that's how you should be looking at like investments. But yeah, no, to you, that's a good point.
So while on that, what advice would you give us young people who are trying to build our portfolios? You've mentioned different companies. So what pattern do we look out for when also trying to build our portfolios? So do we go to stocks? Do we go to shares? Do we go to... Because right now what we are doing is crypto. Most of us are doing crypto and all that. So what advice would you give when it comes to diversifying our portfolios?
Yeah, that's a very good question. So I don't know if you're aware of this rule. There's a rule called 110, right? So the 110 rule, it's not, it's just like a rule of thumb or rather guiding principle. So basically how this rule says is that you take 110 and you subtract it by your age, and then the percentage that you get means this is the percentage of your portfolio that you can invest in like high risk assets like shares, ETFs, the cryptos and whatnot. Now, when you look at a 20-year-old person, when you subtract 110 minus 20, what will that give you? 90. So it means 90% of your portfolio should be in high growth assets like stocks and ETFs and whatever. Now, why is this? It's because as a young person, you have a long way in terms of, you know, they're going to be like market swings, that is okay. But you also have an opportunity to grow. Like you have an opportunity to write down the market swings. So, but when you look at a 50-year-old person, 110 minus 50, that will be 60%. So only like around 60% should be in high risk assets because you don't have time to recover in case the market goes down. However, a caveat is that this is not cast on stone. We do know there are young people who are risk averse. They just don't like risk. When you tell them, why don't you invest in Bitcoin? They're like, maybe I would rather invest in like, safer instruments like bonds and whatnot. So this is just a guiding principle. So if, as a young person, if you can be able, because most young people, the goal is usually to grow their money, right? Yeah. So growing their money means investing in places that will enable your money to grow to grow. When you look at an older person, it means their goal is pretty much to get cash flows from their investments, meaning they will now lean towards investing in government bonds that will be able to provide that.
Okay, and I just hope the crypto is regulated.
We don't know whether it's regulated. Nani told me, and then I had Nani, and then I did the,
You must get it.
Yeah. They have mentality. That's what is happening for most of us.
Yeah.
Okay, going back on principles, I have a
Yes.
question. Okay, so for me, growing up in school, I was taught you should save 50% of your income and 10% if you're religious goes to, tithe or something. So for someone trying to come up in the world as a young person, how do you go about making that capital in order to, invest? How do you go about looking for money? as a young person.
Looking for money as a young
Yes.
person.
Yes.
So are we talking about Keith, who's just completed high school?
No, we're talking about generally as a young
Generally,
person.
okay,
Yeah.
fine. Again, it all boils down. So let's take, for example, we are assuming the young person does not have income, right? Maybe they are in college or they're just cleared high school. So that would look like, again, investing in yourself, investing in knowledge, because for you to invest, you need money, right? You need some sort of income. So where does that income come in? No one is just going to come and tell you, Keith, and give you something and tell you, take that, go invest. You have to work for it.
Yeah.
And unfortunately, in our times, as much as we're talking about all this technological advancement, it is so hard for us to compete with AI these days. So the question is, how do you position yourself to ensure that you're still creating value even in the midst of all what is happening right now? That means we'll be looking at newer and upcoming careers, like prompt engineers, like people who are actually training the models, or I don't know, researching QC, quantum computing, or robotaxis, or I don't know what that looks like, but essentially just appraising yourself with what is happening in the industry and positioning yourself in such a way that you'll be able to, again, give value and be compensated for that. So that is your first move. Now, second step, Keith has completed university, he has a good job, but he's still a young person. Maybe you don't have kids, you don't have responsibilities, and you're like, where do I put my money? So we have the 50-30-20 rule when income starts coming in. So it says 50% supposed to go to like your needs, 30% to your wants, and then 20% towards your saving or investing. So that's where you start, right? In as much as you want to enjoy life a little bit, and that's why we have the wants portion of that rule, the 30% first. So there's also need for you to try and set aside something. That setting aside, it all starts with you being very consistent, deliberate, and disciplined towards achieving your goal. And that's what I'm saying. Even when you start working, Keith, I think this is also just like talking to young people out there. When you start working, craft your goal. Tell yourself, in the next 5 years, where do I want to be? In the next 10 years, where do I want to be? This will really help you to even, in terms of your relationship around money. When someone tells you, hey, twende dunda from Monday to Friday, you'll be like, I have a bigger goal that I'm actually looking towards. Yeah.
So delayed gratification.
Delayed gratification. To sum it all up, yeah.
Okay. So we are almost at the tail end of this conversation, the Gen Z edition. From Guvi, maybe the last comment you have about this show, and also if there is any other question that is still pressing.
I think advice to a 20-year-old. What would you tell a 20-year-old who is just getting an allowance from the folks? And every now and then we're told to changa for whatever, changa for uji, changa for whatever, what do we do? A 20-year-old who has absolutely no knowledge about finance, what do you have to tell them?
I think if I can go first, and this has really affected a lot of my friends we had. One, avoid loans for consumption. Consumption loans, avoid. Two, avoid Shylocks. And these digital vending apps, they just make you feel frustrated, especially when you default. And finally, as she has said, at 20 years, learn as much as possible. One, about investments, and also on the skills that you would want to get at UFA Julie.
Yes. You've pretty much exhausted everything, but I am a strong proponent of investing in yourself, especially as a young person. I can tell you for sure, out of all the investments that I've done, the one that is paying me the most is on the knowledge that I invested like 5-10 years ago. I can tell you sure for free. Not the investments that I've done in like global stocks or what, but the ones that I did on myself. And again, even for me to invest in global stocks and ETFs and whatnot, I had to learn. I had to first of all invest in myself. I remember I attended a Bujani class, and they were doing the classes on, I don't know if you've heard of a Bujani.
I've attended one.
You've attended one, I love that. So for me, I started the classes way back when it was starting, I think in 2018. And at that time, they're just starting on WhatsApp. And let me tell you, I was so hungry to learn about how to start investing my money. I just started my first job, and they were doing it on WhatsApp. And that's where I learned about, like the bills, bonds, over and above the experience that I got over time. So it's also about investing in, learning about all these investment opportunities. Yes.
To you, Kate, maybe final comments, or there is a further question that you want to ask?
For me, it's just one further question. Going back to investing in yourself, what are 3 books you would recommend someone trying to increase their financial literacy?
I'll give you 2 good ones.
Okay.
Right? So number 1 is Psychology of Money. So pretty much you tend to understand your relationship with money. And one thing the book says is that you'll realize that relationship with money for most people, it is more emotional than logical. Right? So that's why you'd find people buying things to impress people that they don't even like, or they don't even like you in return. So it'll help you understand that. The other one is a Total Money Makeover. So this is for anyone who's really struggling in their finances and you don't know where to start or how to go about it. So it gives very good examples of people who've succeeded through what you call minimalist kind of behaviors, like living within your means. So that's a very good book. So yeah, those are my 2 ones, the big ones.
Top 2. Okay, thank you so much. And to you, Efe Julie, now that we are
Hold up,
finalizing.
you're not giving us your books?
Your books, sir?
Yeah. we need as many books as we can.
Okay, I think for me, the book that I can think of is Rich Dad, Poor Dad. And why is that? Because of 2 things. One is that the book is a proponent of investing in assets and not liabilities, not the assets you have. Then 2 is that when you encounter a problem, you just don't say that it is impossible. The guy used to ask himself, how can I do it? Yeah, so I think those are the 2 key things. If you ask yourself, how can you do something, then impossible becomes possible. So I think those are my 2 books. I think the others I have to charge.
I know. Anyway, just a caveat. So any company that I've mentioned is not a recommendation at any given point. So that's a disclaimer. Always do your own due diligence and research when it comes to investment opportunities. Yeah.
Okay. So final comments from you now that we are finalizing, or you are done?
I'm just saying it, but I think my last comment will be, regardless of what age you're in, can be like you're 40 years old and you feel like it's too late for you to start. 1, it is never too late for you to start investing. And for the young people, the Gen Zs, it is not too early for you to start investing. Yeah.
Oh, okay, interesting. I think from the Institute, and that is the Institute of Certified Investment and Financial Analysts, we are happy to host this Gen Z edition, and we hope to host more episodes in the coming period of time. Thank you so much for joining us today.